Okay, so in this video, right, I'll share with you the general overview of the framework that I use to trade the markets. So at this point, right, you have learned a lot. You've studied, the market structure, support resistance, entry triggers, breakouts, pullbacks, stop loss, trade management, and etc. So this framework that I'm going to provide with you will help you piece all these puzzles together. What this means is that you will be able to trade the markets, right? No matter how they evolve, whether it's a trending market, range market, a weak trend, healthy trend, and stuff like that. So this is definitely a very important video, right? I'll walk you through the overview first of what to expect, and the subsequent videos will go into further details of how to apply this framework. So first and foremost, to begin with, right, step one is to draw your support and resistance, right? You need to mark up the important levels on your chart, because after all, these are the area of value on your charts. So again, I've developed a very detailed lesson on it. If you're not sure, go back to the lesson and review it. Number two, once you've done your support resistance, right, you want to identify the stage of the market, right? Whether it's an accumulation stage, advancing, distribution, or declining. I do admit sometimes it won't be so clear. Sometimes it could be in a transition, but you want to do your best to kind of classify the markets, right, in the appropriate stages, whether it's whether it's in one of the four stages. Once you've done that, then you will look for a valid entry triggers, right? So your entry trigger, I've shared with you a number of them, the false break, breakout, trend continuation, and stuff like that. So once you know the market stage, you want to find the valid entry trigger to trade that particular market condition. Then you'll set your stop loss, right? I usually set my stop loss 1 ATR above the swing high or swing low. Okay, and then your exits. Exits could be, depending on your goals, whether you want to ride a trend or whether you just want to capture a swing in the markets. So this exits, right, I try to leave it more open-ended. I don't want to, put on any or force any thoughts on you, because this is something that will vary from trader to trader. So if you want to study the different ways you can exit your winning trades, you can go down to the lesson on, your trade management, right, or rather your trade exits. As for stop loss, right, as I said, right, I generally set it 1 ATR above the highs or the lows, right, because I don't want to get stopped out just because the market trades slightly above the highs or slightly below the lows. I use 1 ATR generally, right, 1 time the average through range. So just to put it right, generally I use 1 ATR. But then again, right, you don't have to use 1 ATR. Some of you want to be more conservative. You can use 2 ATR, 3 ATR, and that's pretty much fine as well. It's all a matter of your risk, reward, and position sizing. So that's it, right? This is basically the framework that I use to trade the markets. And in the later videos, right, we will walk you through, right, step by step on how to actually apply this to your trading. So with that said, I have come to the end of this video, and I'll see you in the next.